All right, I think we are good to start. We have over 60 participants joining us. I know that we had 200 registered participants, so we know that more people will be joining us, but we'll begin and they'll find us along the way. So welcome everybody to this webinar where we talk about Linkages 2.0 and really exploring how VSLA digitization is opening new pathways for financing. My name is Rachel Kentenyinji. I am a communication specialist. I am in Kampala, Uganda, and I know that people are joining us from different countries, so you are welcome to this webinar. So during this session, we have an incredible lineup of speakers. We have actors that have walked the journey of linking VSLAs to formal financial institutions. We have innovators that are exploring new ways for these models. And of course, we have you, the participants, and we know that people are interested in this topic because you have, in one way or another, worked or interacted with this space. So this is going to be an interactive session, and we welcome you to share your questions in the Q&A session. We also have a poll just to really understand who is with us. So I'm going to launch the first poll just for people to share where the sectors they are coming from, the countries they're joining us from. Please confirm that you can see the poll. The first question is, who is in the room? I see the non-profit sector is leading. That's very interesting because we know that the non-profit sector really started these linkages. And so we are delighted to have you in the room. We have people joining us from the development world. We're yet to have the telecom people join us. Fintech is also doing very well. Abby, your hand is up. Are you not able to see the poll? We have so many hands up. If you can put in the chat, we have the chat open. So if you have an issue, then you can please raise it in the chat. In a minute, I'll stop the poll so that we delve into the discussion. Unfortunately, we cannot see the countries as they're going on, but we'll share this information at the end. Okay, I think we have good participation. 87% of us have answered. If we can bring it to 90%, I'll end the call. I'll end the poll. 87 going once, going twice. Thank you so much. Okay. We'll also have a chance to participate in the discussion. We have a whiteboard where you can share 3 things that have worked in as far as VSLA linkage is concerned and 3 things that have not worked. So feel free to share in the whiteboards and share your thoughts. In a minute, I'll invite our moderator to take us through the session. But before that, permit me to invite the regional lead for UNCDF, Inclusive Digital Economies, Mr. McCaffrey, to give us opening remarks and really set the stage for this discussion. Mike, over to you.
Thank you, Rachel. Thank you also to the speakers, panelists, the featured innovators we have here on this call. It really is a who's who of superstars in this space. So I look forward to a really interesting discussion and learning a lot. Bringing industry players together is one of the things UNCDF really values. It allows us to see the ecosystem and really help people in it learn from each other and avoid pitfalls and really see where the opportunities are. The United Nations Capital Development Fund is a catalytic blended financing platform within the UN system. UNCDF works to crowd in finance to solutions that accelerate progress towards the Sustainable Development Goals. One of the important things we do is provide technical assistance, grants, loans, guarantees to financial service providers to extend appropriate products to those that can benefit from them. We focus first and foremost on least developed countries, but we also work in small island developing states and in fragile economies as well. In all of these countries, all of the places where we work, people there struggle to find financial services that support their needs. And these are particularly rural and low-income people. In the era of financial inclusion, people in our sector tried to solve this problem by extending access to formal financial services to these marginalized groups. Terms like financial inclusion for all, bank the unbanked were popular. And there was potential in that philosophy, right? It could extend a lot of benefits, right? It promised to unlock the capital and expertise of big banks and telecoms for these marginalized populations. It seemed very scalable because of its formalization, and some services like mobile money in this region did scale. And it offered the opportunity for us to regulate through this formalization some of these services and offer better consumer protection, which we know is an issue across the informal-formal spectrum. However, many attempts in this space, while well-meaning, did not fulfill the first principle in financial service product development. The service has to be better than what people already have. And while many services people use are informal, they have stood the test of time. They have been perfected over generations of use and are quite elegant. Formal is not better than informal. It can be, and we need to carefully weigh the pros and cons before advocating for it and designing new financial services. We know people with low incomes use a myriad of financial services as they try to get their money to work for them while also creating the liquidity they need to manage daily expenses. Many rural people do not use a bank account despite having access to one. This is because savings at a bank generally does not provide real returns, does not allow their money to work for them. Deposit rates are generally below inflation. Fees eat away at the capital deposited. It is still better for many people in rural areas to buy a small chicken than to put their money in the bank. That chicken grows, providing a return. It lays eggs, providing liquidity. Many rural people who have taken the chance to buy a formal insurance product do not renew. The reason is they prefer to take informal credit over insurance. Informal credit may be more expensive, but it is certainly more flexible. The first time someone takes flood insurance and experiences a drought, or their roof caves in, or they have a health experience that's not covered by their policy, they immediately realize that it's flexibility that gives them value in these products. These informal mechanisms people actively choose over the formal ones we design are because they're better in many cases, and we need to acknowledge that. Village savings and loans groups, VSLAs, are marvelous examples of informal finance. Members are owners, right? Savings, credit, insurance are all products that are offered through these groups, and basic mechanisms are put in place so that group members who want to borrow and group members who want to save can agree on terms to allow them both to do so in a way that is generally a better design than than banking at a bank. Having said that, there are risks and limitations. They are not perfect, but we need to be careful to understand and preserve the elegance of these organizations, of these common denominators of finance, as we look to solve some of the problems that they do incur. Over the last 15 years, at least, people have been trying to do this. I think mostly about 10 to 15 years ago through bank linkages. And then I think more recently through digital platforms, right, that allow the groups to ostensibly manage their operations more effectively. Most of them have not stood the sustainability test and are no longer around. They have caused major issues, over-indebtedness of groups. Many of the digital solutions were not designed for low infrastructure rural areas. And many did not provide enough revenue to the financial service provider to sustain that solution over time. A new cadre of fintech organizations is now involved in this space, and over the past several years seems to have served many of these issues of the past, yet is also introducing further issues through some of their unique solutions. For example, using digital tools to manage a group can provide efficiency. It can also concentrate power in those within the group that have the most skills to operate that digital solution. And those are disproportionately men. We need to be careful. These discussions on sharing experiences, challenges, and lessons learned, and our sense of opportunity in this space help us avoid pitfalls, and they calibrate successful paths forward together. UNCDF has been supporting pioneering fintechs in this space over the past few years, and we want to ensure the future of this space measures new solutions not by their level of formality, but by the degree to which they make a difference in people's lives. Do they help them pay for daily expenses? Do they help them mitigate unforeseen risk? Are they better than what they already have? This is the transition from a financial inclusion lens to a financial health perspective, and it is sorely needed. We look forward to learning from everyone in the room to understand how models available for community groups are linking formal financial service providers and enabling them to access finance in meaningful ways. Thank you very much.
Thank you so much, Mike. Really appreciate. I know that Richard is going to delve into that. So I'll invite him to take over with the panel discussion. We have a few people that are not able to see the chat. We have activated that. You can still try. If not, put your comments in the Q&A tab. Thank you. Over to you, Richard.
Thank you. Good morning, good afternoon from wherever you're joining us from. It's indeed a pleasure to be moderating this very strong panel on, I don't think you can assemble a better able panel on the subject around linkages in the VSLA space. Just to recap what most of you have seen, I think in the communications, we have a lineup that I could split into three categories. You have the pioneers of the formation and capacity building of VSLAs. In there you have CARE, you have CRS, and you have Vision Fund. I think across the region, but also globally, are respected for their work in this space. You have a bank. Postbank is one of the pioneers around linkages in Uganda, so a lot to hear from them. And then you have a number of innovators, or call them fintechs, that are bringing in the digitization, but also allowing for the linkages, and they also have a track record that we are going to learn from. and hear what their journey has been like, but also have Comsip from Malawi, and Kelvin is embarking on digitization of countrywide digitization of VSLAs in Malawi, and he'll tell us about why they are taking this route and what they hope they can avoid as lessons that have been learned elsewhere. I just want to share a bit about why this is important, and I have one slide. I hope you can see it. This is a country I didn't want to mention, okay? But it represents, it's a country in the region. It's also represented on the call here. This country has 19.6 million. So those of you that are good with ChatGPT maybe can get to know which country it is. 82% rural, 18% urban. But look at how they are served by the banking sector, which in most cases is the largest player in the financial services sector as we know it. So if you look at it, this is a structural issue in our financial systems, and it cuts across most countries in East and Southern Africa, which we represent here. The last slide I want to show is this one that tells us that almost all businesses in our countries are micro and majorly informal. So to Mike's point of formal is not necessarily better, it's actually that we are largely informal economies, and that's not necessarily bad. Then the question is, what type of financial services ought to be working for these types of people? And that's where the discussion of VSLAs, where most of the informal financial services are served, and how we link them to where most of the resources in the financial sector are, which is the formal sector. And to embark on this discussion, maybe also to recap a bit on why I met somebody recently and they told me about what we are doing in the space, and we dwelt a lot on, are we really moving the needle? Are we learning anything, or we're just regurgitating things that started, as Mike said, 13 years ago? If there are things that were piloted back then, have we learned from them? Are we building on them? Are we going to scale? And those are the things I'd like to discuss with the panel here today, which has been on this journey for long. And I'd like to start with maybe CRS. Anthony, you'll take a minute, maybe half a minute to introduce yourself, but then quickly go into the discussion on digitization of VSLAs and linkage of VSLAs to former providers. What you think has worked? I know you oversee the work at CRS across East and Southern Africa. What has worked, what hasn't worked, and what lessons CRS is taking from this?
Hey, Richard. My name is Anthony Mang'eni, working for CRS, based out of Nairobi as the regional advisor for financial inclusion and youth livelihoods. CRS promotes the savings and internal lending communities methodology, which is SILK, and that's just a variant of VSLA methodology as well. And we've been in this space for close to 2 decades now. And in terms of digitization of savings groups, we did our first pilots earlier on from 2012 coming on up to now. We have done a number of pilots. And like everyone in the sector agrees, digitization of VSLAs has been a subject that's been on the table for some time. Quite a number of lessons have been generated. But we all agree that we have not seen the traction we want to see for a number of reasons. And some of the reasons are well documented. The barriers to access of the forms, barriers to access to the technology itself, gender, digital divide, and all those kinds of areas. And we have good data coming through on how this can be addressed. And it's something that as CRS, we are doing a number of pilots to know what's the best way forward beyond the apps that have been provided, a number of solution providers that we are engaging, talking to them, and also engaging the groups, the private service providers, who are actually the people on the ground and their voice needs to be heard in the technology platforms as well. So we provide a platform where the service providers who are providing the solutions, the private service providers who are engaging the groups themselves are also having a conversation with each other, so that at the end of the day, we have solutions that actually work for the user, and also not only increase access to financial services, but also usage. Stepping back a bit, before the digitization of savings groups, the topic had been financial linkages, which has been a topic for almost 3 decades now. And we know that especially with colleagues from Postbank in Uganda, Postbank in Kenya, Tanzania Postbank, currently known as Tanzania Commercial Bank, and now in Zambia, the appetite has been good in terms of reaching out to the groups, but the complaint has been the dormancy of the account. Almost 70% in Uganda, we saw the account became dormant after the project closed. So there is need to understand how groups operate among the formal financial service providers. And I think that has been the reason why digitization of these groups has become critical, so that the financial history, the way the groups operate, the flows, the aids of the groups is better understood on a platform, provide the data that informs decisions in terms of product development and the type of features that actually are going to complement and actually add value to the VSLAs. I agree with Mike that formal is not yet better, and I think digitization is going to provide the data to make formal start speaking the language that members of VSLAs are actually going to find is in sync with their needs and expectations. So as CRS, we are still in the sector and trying to bring out new lessons, and we are excited to have more conversations with the fintechs and formal financial providers in this space. Thank you.
Thanks, Anthony. And I'll bring in Ibrahim from Postbank a bit later to tell us about their learnings around the high dormancy that you talked about, how they've refined the products maybe to be better, if at all. But let's also quickly hear from Care and Care Jacqueline, also to give us a bit of general understanding of how things have evolved at Care around digitization and linkages in terms of what works and what seems to not be working.
Thank you so much, Richard. I'm Jacqueline from Care International in Uganda. So just speaking to that, for us at Care, what we have seen work very well with the VSLA digitalization is, one is partnership with private sector actor. When you look at the digital sub-wallet, this product was jointly designed between Care and Postbank. So the digital sub-wallet in its form, that was mainly to ensure that the women do access financial services, but particularly addressing the needs of savings. So the women in the VSLA group, to address that need, the saving need as a starting point, together with Postbank, we created a sub-wallet within the Postbank product that was specifically for the women to do the saving. You realize that after the project ended in 2019, the Postbank continued with it, and we are proud to say that the Postbank is currently rolling out is as a result of, because they then commercialize the digital sub-target, but rather for the entire country. And they're saying that the next disbursement of PDM will go through the Wendy platform. So we believe that partnering with PSA, private sector actors, really can push, digitalization of VSLA. Speaking also into partnership, also the Chomoka platform. We created the Chomoka platform to represent the digital form of the VSLA. Now it's handed over to NSUPOCO. So NSUPOCO is going to work around that to ensure that we are addressing the need of access to capital. How can we use the data of the VSLA to credit score this VSLA so that they're able to access financial credit from the financial institutions?
But Jacqueline, if I interject a bit, is yes, these solutions have been provided to the groups for what, to what end? Okay, if the groups as we know them today are not seeing enough value for them to be able to pay for the digitization services, or for the digital solution provider to provide the services without requiring payment, and this all has to be held by an international organization like yourself, what do we learn from that? And at CARE, how do you perceive this?
So like I said, CARE designed this together with the private sector. So once that is done, it's handed over. Right now, CARE does not have, authority over Wendy. It's over to Postbank. So Postbank has improved that product to Wendy. It was initially digital sub-wallet, which was just to address the project, beneficiary needs, to their saving needs, so that they're able to access formal financial institutions through the savings account. But now it's over to Postbank. Postbank has improved the product actually from the digital sub-wallet only to the Wendy product. So that is the sustainability we are looking at. Yes, like Anthony said, that dormancy is still there because we demonstrate it's now upon the private sector to pick it up and also ensure that these not only the project participants but others are also brought on board. We appreciate that technology can be brought, but the adoption is still very slow. I can still say that adoption is still very slow. People pick it, but now to continue with that, especially after the project, that's where the issue comes in. So there are certain limitations that we try to address in the digital sub-wallet, especially on capacity issues, where we have to put the digital champions, the members who are within the community, to support those who are digital illiterate to access. I don't know if you're getting me, Richard, because at some point you were.
Yes, I can get if you could conclude on that one.
Yeah, so that is the learning that we got, but also capacity, like I said, addressing the social norms around digitalization, because that is one big thing that has hindered most of the, like Anthony said, the equality around access, but also usage. So we realize that when women or when people don't have the social norms restrict them from access, from control. I can give an example. During our gender survey or gender analysis, you realize that about 74% of women own phones in the areas where we are working, but only 5% have control over those phones. So that restricts them on how to use the digital financial services. So that is one key, those are two key things that we learned. Partnership, but also addressing the social norms, because when those are done, then we can really capture all the issues around the access, around the relevancy, around, around the control, and yeah.
Thanks, Jacqueline. I'd like to bring you in, Martina, maybe to take this discussion forward on digitization for what, linkages for what, in terms of what really works. And this from where you sit, what you've learned as working or not working around digitization and linkages. Martina.
Thank you. So just quickly, my name is Martina. I work for Vision Fund International. I'm the director for Savings Group Linkage. So really, this is my job, what we're talking about here today. So that's great. On working, not working, let me just allow me half a step back. Why I do think we are currently in a time where it looks like it could work like it has never before. And let me explain that. Linkage 1.0, where we had what you said in the last 15 years, linkage between mostly NGOs, trying to link to a financial sector provider with various results. Has in some cases worked, some cases not so much. We definitely haven't scaled. So really timely today as we talk about linkages 2.0. And selfishly, I want to reference a really good report that has come out commissioned by Vision Fund, but with a consultant from FEM Finance, called The State of the Practice, Savings Group Linkage 2024, just been published, and basically all of the panelists and speakers here today are featured in that report. So basically just saying Linkage 2.0 has now a variety of actors. And this is my point why I think, we are in a good time now and it can work, even for the audience today. I do think VSLA savings group linkages can work linking to a financial sector provider using digital tools if all the actors that I'm mentioning are working together. It does need NGOs with preparing the groups and capacity building. If not, you cannot link the group. A financial sector provider with the correct product. We have learned, over the last few years, as you rightly said, it needs to be better than what the savings group itself has already, and they have some very good things. So, just the savings account, just the credit, like the traditional product, and I'm talking here with my financial sector hat, we didn't have products that were attractive enough, full stop. And I think we've learned from that, and we're now adjusting, and we now have products that are more attractive. That can be done because another actor, fintech, right? We didn't have that years ago. So yes, we were missing information on the VSLA. Yes, we are risk averse, and we couldn't act because we just didn't have enough data. So the innovators on this call and more are providing now the data that allow us to offer better products. Although, bring a question that we already said, the sustainability of those companies itself, right? Connecting another actor, mobile money. A few years ago, we couldn't make it work because you can't ask a group to travel 100 kilometers to the next town to cash out, right? So mobile money, the mobile wallets, the agent banking has opened, again, for us as the financial service provider, finally, the last mile that we actually can get the money to the client, because there was a big barrier on distance and just logistics alone. So mobile money network providers, still we are facing, problems with liquidity, agents not having enough liquidity, but they're there. And that's why I'm saying there's a good time to work on that. Mobile network operators also being more open, as we're dealing with groups here. So now I'm moving into mobile money network operator, another actor, regulator, governments. We're talking about groups, right? And not in every country is it easy to link to a group because, as you said, formal, informal, there's a fine line. But as a financial formal sector provider, we do need an identity, right? You do need a client. You do want to serve them. So there is know your customer, KYC criteria. And if the regulator government does not allow, or doesn't make it, or let's face it, too cumbersome for a group to register or get those KYC, then for the group, it's not interesting. Or for the financial sector provider, it is too harsh to get that. So sorry, I could talk about this for days, but the point to wrap it up, the cycle is that I think right now around the table, today in the industry right now, we do have interest of many more actors that together, I think each of us have the pieces of the puzzle to make it work. But obviously, that comes with new challenges and barriers that need to be talked about. But I think, the advantage we have now, compared to 10, 15 years ago, is to have that development sector, profit sector, mobile money sector, government, all circling around that, let's say, the group. So that is why I'm thinking with all those pieces, but only with all those pieces, we can make it work. The jury is out. I think there's a lot of good activities on there right now, whether we can.
Okay, great. Thanks. And we'll be getting back to you on what you think could accelerate the speed at which now things need to move. If we think we've gotten the the right combination of factors. I'd like to pause a bit and bring in the voice of an innovator telling us about the array of services that they provide to VSLAs. So Rachel, if you could get us the Tanzania case with Lawrence Rusere.
Thank you, Richard. Am I live?
Yeah, we're going to play a video, Lawrence.
Please go ahead.
Founder of DMA Limited, an agri-fintech based in out of Dar es Salaam, Tanzania. Now we are in our 5th year of operations. We are so excited about the products we are putting up on the market, especially when you're addressing VSLA challenges. The 3 key ones that we all know about is whenever there is a VSLA and they want to save for a purpose, always the money does not end up in the purpose, save only when you're doing borrowing between each other. But here, when you talk of agriculture, you're talking of having valid, appropriate agri inputs, which gives you higher yield year in, year out. But DMA, we know with VSLAs, if they want to save in an informal market or formal means, which are wakalas, agents in the networks, in the ecosystem, the banks are never there. They don't want to be part of the rural network. But of late, we've got robust network. We've seen the likes of Halotel putting in fiber across and other networks across the rural. But here we are, we need to have that usability available, which is also not available if you're going to give a farmer group either a card to use for their group accounts for any transaction that they require. Of course, the last one is acceptability by the members, that they want to still see security around the box, even though what is in the box is not as calculated, or it's not as valid. Sometimes it's only paperwork that is still there. Money has already been dispersed one way or the other. But here we are with Bida Kikundi. When we offer the groups this particular product, we ensure that the data set is rich. We address 5 areas of problems that small farmers face. First one being data set which is not valid and rich, and it's always stale because no one is updating it. And as alternative data, we as DMA ensure that that data is kept available through MVAs. We contract or engage within the groups. These are lead farmers with expertise. We teach them the good agriculture practice. We teach them how to be savvy with technology and give them gadgets, mobile phones to update this data set through our Vida Kipundi product. With this, they come in weekly when they're doing meetings or frequently when the meetings are scheduled, so that they can collect this data set. With this data set, it's in power for us to know whether you have this fiat money which we can convert into tangible cash when the time comes for you to buy agri inputs, especially hybrid seeds and inputs which can grow your yield from 1x all the way to 5x, if not more. We've seen this happening within our sunflower value chain and others. Whenever we apply good agriculture practice and we provide hybrid seeds to farmers, it gives them higher yields. So with this particular Vida Kikundi, one of the three advantages we see is we are connected DMA to FSPs and MNOs that are across the country, and this particular product is now rolled out in conjunction with them, so that if we collect cash from the groups, we can go and deposit directly to the wakala who is within the rural network and ecosystem. From there, the money is now used as collateral in the time that we want to offer or aggregate a demand on agri inputs. But as another sweetener is that we can have those wakalas add other businesses. We've seen agro dealers coming into rural who are actually tech savvy and collect with what offer tools, Vodacom tools to the rural, which has changed the game for the farmers, because now they have money, they've been sent money by their relatives, they can still pay for the agri input within the network. Another thing is, of course, if you're going to give them cards, the power of identification, that particular card can also work as surety to you when you offer the farmer any. At the moment, we are in a program right now where we are buying sunflower and we are using the Vida Kikundi and the opening of group accounts to farmers as a sweetener. As we buy the produce, a percentage goes into the wallet as a startup kickstart as a capital to the group members. And this, they've seen that when now they collect their other or subsequent funds or subsequent contribution, they've already got the kickstart in their wallets. And this continues for a period until they are ready to get the agri inputs that they require, which are hybrid seeds. As we have said, these hybrid seeds are growing their yield from 1x all the way to 5x, and we've seen this being the power. And also the Wakala network. We can see this Wakala in the rural picking up big business, and we've empowered a lot of youth to be part of the network. And welcome to DMA, and that's the power of technology.
And that's Lawrence, what he's doing with technology in Tanzania, and you can understand the strong linkages around agriculture and financial services. I'd like to bring in Postbank, and the previous speakers talked about how Postbank has been very involved with them. My question to you, Ibrahim, and you'll present yourself a bit more in detail, but along this journey at Postbank, I think I remember maybe 7 years ago, hearing that Postbank has a VSLA account. To be provocative, I would say, why haven't we seen this go to significant scale? What are you learning about what's not working? And have you found any solutions to this, or should we look for solutions elsewhere? Or will it work anyway? How do you see linkages being better with financial service providers like yourselves?
Okay, thank you very much, Richard. Just confirm you can hear me.
Yes.
You can hear me, Richard? Okay, thank you. Okay, so to your question, Richard, I'll start by saying along the way, we dropped the ball, but most importantly, we picked it up, and I'll tell you, we have had quite a few learnings, just like my colleague put it earlier, Jacqueline. So we use the data that we have been able to collect from the VSLAs over time, and we realized that we need to address the problems. Yes, we had an account, but on hindsight, the account didn't address the challenges of the different VSLAs that we had on board. What are some of the challenges that we had around that space? So we invested heavily to do a study across the country. One of the things that were a bit challenging for the VSLAs was, one, the KYC that we asked for as a financial institution, quite challenging for them. The level of literacy for the people, where we were asking the KYC to join the banking services. Number three, the cost of financial services across board. But then number four, we wanted to look at what they need as well. One of the complaints that came out quite clearly, or the needs that they had, was record keeping, transparency, and things like that. So what did we do as Postbank with the guidance and the minds that we picked from our partners? We came up with a wallet. Now, when you talk about the Postbank wallet, we have made it as inclusive as possible. One, with a wallet, you can onboard as an individual. All you need is a national ID and a phone number from any telecom that you subscribe to. Number two, you can use it through USSD or a smartphone. So that means it's inclusive. Anyone in the village, anyone in town, anyone with access to network can use the mobile phone. Number three, it is not aligned to any specific bank. Whether you're a Postbank customer, a non-Postbank customer, Standard Chartered, any bank, you are able to use the wallet the way you want. So it has given inclusivity. What does the wallet give you? What we have been able to put on the wallet is, number one, you can join the wallet as an individual using your national ID and your mobile network number, your MTN number or Airtel number, whichever. So if you join as an individual, you can then come together as a number of individuals and form a group. So we have put for them group services. What can it give you? You can serve as a group. There is transparency. You can see every activity that each and every group member is doing on the wallet. You can track the savings, and then we can monitor, and we are able to score and also give loans to those groups. So we have created quite a buffet for the different VSLAs. But what's the most interesting aspect out of the whole journey. It is the interest. So quite a number of people want to see their money being saved somewhere. They want to be sure that it is safe. So everyone in the group has access and can see each and every activity that is happening on the wallet. So there is transparency for all of them. But we have also gone ahead to put a catch and something enticing. So when someone saves on our wallet, we are able to give you up to 10% on your savings on the wallet. So that is to encourage them to keep saving on the wallet, as opposed to the briefcase or, you know, whichever boxes they have across board. And I'll tell you most interestingly that even 50 kilometers out of Kampala, which is the capital city, people are still saving in a box and two different people are holding keys. So this has been revolutionary for them. They can see their money, but also we are paying interest on a daily basis. So we have been able to address the need of these guys. One is record keeping. The VSLAs are able to see and track each and every record that they enter into the different wallets. If it is Richard making a payment, you can see it, Ibra making a payment. If it's a withdrawal for a loan, no one on a wallet is able to make a payment to another without going through an approval matrix. So if you came in as a group of 10 people and you want Ibrahim, Lawrence, and Christine to be approvers in that group, that means for any transaction being debited from a group account, Ibrahim, Lawrence, and Martina will have to give an approval. You can never debit without the authorization. So that has given them a sense of security. It has also created accessibility, but most importantly is the scale, Richard. So you're asking me, we had an account and you're not hearing it scaling as much. I totally agree with you. We launched the wallet in November 2023. As I speak, the wallet has 720,000 registered members, but the catch is those members are majorly from groups. We have 8,670 groups, majorly VSLAs. So the different group comes as a single group, but it comes with 100 members, 30 members, 20 members, whichever, however they have formed it. But what has given them the convenience is ease of KYC, ease of onboarding, access. But we have some challenges, and I'll speak about them. One of the biggest challenges we have is really the network. And we have partnered with MTN and Airtel to try and, scale it better. We have also worked with the government, and that's why you see we have gotten a lot of programs, but also we have leveraged the partnerships with CARE and all our partners that we are dealing with. So how have we been able to address the challenge of dormancy? That is how we have done it, Richard. We know that people were shunning from the banking sector because one of the big complaints we got, we were quite expensive. Going to the mobile wallet, self-service, we can't charge the customer the way we would charge the customer in a bank. So we are way cheaper, actually 75% cheaper than what you do on a mobile wallet, the normal mobile wallets that we have. So that has been able to give us scalability, but also usability, and that explains the numbers that we have been able to pull in the last quarter. It has been quite a journey. We have learned a lot, but we believe that our colleagues, we can still come together and, scale it a lot more.
Ibrahim, just on that, as a chief risk officer, is this product riskier? Does it make money? And maybe not, and you're just doing it because you're a government-owned bank, doing it for... Okay, Richard, I'm the chief retail officer, so I'm in the business of making... Yeah. Yes, I'm in the business of making money. I love money a lot, but then when you go into the space of the VSLAs, I'll tell you, Richard, if you go with the mindset of making a lot of money, you will never cut it, and all the partners will tell you that. So the idea is we decided, and we just to put it out there, we are not charging to onboard onto the wallet. We don't ask for a minimum deposit or anything. How do we make the money? We have partnered with quite a number of people. So if we onboard the different
VSLAs and the members they are under, and they deposit their money on the wallets, we are then in position to reinvest the money. That is why I said we can give them interest of up to 10%. So if I'm holding deposits, more like you see with the unit trusts, they pull money from quite a number of people, put in a pool, invest, and they're able to give you money. So we have taken the concept from a unit trust and made it more accessible to the individual. That is how we are able to make some margins of money, very small margins, but we are sure we are going to have so many customers, and then we have access to a lot of deposits to be able to deploy, and we are able to lend to them as well.
Thanks a lot, Ibrahim, and we'll get back to the case of Postbank. Richard, I'd like us to maybe showcase Nsibuko, which is also going to tell us about their journey around digitizing VSLAs and where they seem to have landed after all the lessons learned.
My name is Gerald Otim. I'm founder and CEO at Nsibuko. Nsibuko is a fintech company that works with savings and lending collectives like village savings and loans associations, VSLAs. We are active in Uganda and in Malawi with 7,500 savings groups using our platform. Our platform was initially built to serve the needs for VSLAs to have efficient ways to keep their records. We have since added other layers to it, including mobile money payments, the ability for savings groups to move money to a bank account, and our most exciting feature, digital group loans. VSLAs that use our platform now have the ability to access loans directly from the platform. For the last 2 years, we've been piloting this particular capability with the support of the UNCDF, FAO, and the Uganda Development Bank that provided the capital that we have been lending to savings groups. Over the last 2 years, we've provided over $300,000 in digital loans to over 200 groups in Uganda. In previous models, we attempted to work with financial institutions. The model was designed in such a way that we digitize savings groups and enable financial institutions have access to savings groups data so that they could access it and design products for these savings groups or VSLAs and then provide them loans. It didn't work. That model just did not work. So we realized that we needed to play an active role, not just the decisioning of the loans, but the distribution of the loans. So in 2022, we acquired a microfinance license, and we work now with financial institutions as a lending as a service provider. So we take on the responsibility of providing lending services on their behalf to savings groups, and that's the model that has worked for us so far. The whole conception that linkages for VSLAs simply means digitizing VSLAs and then connecting them to financial institutions. That has not worked. What we have seen generally is that even when you do that, when savings groups have their data in digital format, financial institutions will still go with their traditional ways of appraising these groups. They will want to look at their paper documents. They will want to take photos of their collateral. That model just did not work. Embedding loans directly on the platform, using data in the process of loan decisioning is what has worked for us. Leveraging mobile money as a way to disburse and to collect has worked for us. Leveraging group collateral, or what you call social collateral, where the group is entirely responsible for the loan, has worked. Working with a network of digital community entrepreneurs as our local support structures for this product has worked for us. So I think it's really important that we simplify VSLA linkages. I believe that for linkages to work, and this is entirely based on our experience working with VSLAs and also providing financial services, the fintech partner that's responsible for digitization has to be actively involved in the process. It's not enough to just facilitate the relationship, which is what most people think about when you talk about linkages. It's actually important that the fintech is involved, that the fintech is even willing to partake in the risk of the product. They're involved in the design of the product, they're involved in the distribution of the product, they're involved in sourcing resources and partnerships for the product. They're also involved on the ground in the actual process of making sure that the groups utilize the product and the payments are coming back. So thank you, UNCDF, for organizing this session. And thank you everyone that has joined this webinar. I hope that you'll be able to pick one or two things from this session and that you'll be able to implement them into some of the programs that you're currently implementing. But also most importantly, especially for financial institutions that are joining, I hope that you will deliberately make effort to seek partnerships and collaborate with fintechs like us to deliver financial services to people at the last mile through VSLA partnerships.
Thanks, Gerald, and we'll get back to you because you're also live on the panel. I'd like to bring in Malawi COMSIP with Kelvin. So Kelvin, you seem to be embarking on a digitization journey. You've listened to, or at least have taken stock of some of the learnings that your predecessors have learned. But I'd also like to bring to you a question that was posed here by Stephen Milambo, where he says, the challenge is with the design from the beginning, which poses an issue of sustainability, whereby groups have a mindset of receiving free services from NGOs. So Kelvin, as COMSIP, you support VSLAs, you're now taking digitalization to them, and a criticism to you would be that you're actually enforcing this issue of free services to VSLAs that will never be sustainable. What would you say to that, Kelvin?
Thank you very much, Richard. For us as COMSIP, maybe let me start by saying that we are an institution that is an apex or a union of a number of VSLAs that are involved in various activities, and most importantly, and the most famous is agriculture. And we are also an institution that is trying to drive the financial inclusion of the people that are in the rural areas, especially by assisting them to have access to finance. We also have an in-house microfinance institution that we came up with in 2018, which is a deliberate vehicle for accessing finance for the VSLAs. Why did we embark on the journey to digitize the VSLAs? One, we looked at the stories that we were receiving from the people that were keeping the cash, maybe issues of theft, issues of mistrust. And then we also looked at the growth in the technology space, especially the mobile money technology. We also looked at the number of youths that are joining the cooperatives or the VSLAs. And then we looked at say, okay, with the in-house MFI, should we really rely on the manual systems of appraising the VSLAs if they want to access finance from the in-house MFI or indeed any other form of financial service provider? That's why we said, no, we cannot continue this way. It's 2024. By the way, we started the COMSIP in 2006. So you can see the time from 2006 to 2023, where we are looking at starting to think about digitization. Really took us a lot of time. So we can confidently say that we are not trying to bring something which is not possible for them. We are trying to make sure that we bring in something which they need, especially when we look at how they can keep their records. Recently in Malawi, we had the cyclones, I'm sure most of you heard, where most of the records of the VSLAs were destroyed, and some clever people came with stories to say, no, I didn't save that much, I saved so much. And it was quite difficult for us to recover from that cyclone because of those stories. And now we are looking at what if we had a way of storing the information? What if we had a way of making sure that we have got these reports? And also we looked at another issue with the in-house MFI, that those that have borrowed could travel long distances to repay their loans, maybe to bring in collateral, signed forms of loan applications. What if we could find a way of reducing all this stress to them? So we thought of digitization. So to answer the question of
maybe we'll get Kelvin back. Rachel, can we hear the case of the innovation in Rwanda around digitizing VSLAs? And I see in the chat there is somebody who said, and this is a B from Ethiopia, we are seeking to get a software as a service or a solution to onboard local VSLAs to our MFI. Some of these showcased solutions could actually work for you, Abby. And I think we can create the connections there. Let's hear from Bob in Rwanda.
Hi, my name is Bob Sonogambwa, and I'm the CEO and co-founder at MVEN Limited, a fintech based in Rwanda that is involved in the digitization of village savings and loans associations. Since 2015, we've been working with local and international NGOs to try and bring members of VSLAs into the formal financial space. And we are doing this using our digital savings platform called Bwiza. Bwiza is a Kinyarwanda word that means to accumulate. And the concept behind this is to help the members of the VSLAs to grow and create a transferable financial track record for themselves, so that when they are ready to migrate into the formal financial space, they are not just appearing as people that are previously unknown, which has been one of the biggest hindrances for them to grow themselves financially. One of the things that has worked the best for us has been designing with the end user. So what we did is that we went down to the village savings groups and we built our platform with them in mind. We took their ideas, their way of operation into consideration while building the platform, so that at the end of the process, we had a platform that they were comfortable with and that would work for them perfectly. The other thing that has worked very well for us is the use of community members as our agents. People with community roots in these areas where the savings groups are make very good champions that make it easier for these people to adopt digital technology. We are bringing them into something that is completely different than what they are used to, that is using books and boxes, and asking them to trust a digital platform that stores their money somewhere in the cloud, and having people amongst themselves that they feel confident in, that they believe in, makes it a lot easier for them to adopt the products that we sell to them, which is digitization. The third and most important thing that we have seen work is being patient with them and holding their hands. So we've invested a lot in digital financial literacy alongside the financial literacy lessons that we've tried to give them. We've been able to see good results in places where we've invested extensively in financial literacy and digital financial literacy for the members of the savings groups. This has led to greater adoption and greater usage, and we've also seen a growth in terms of their financial ability over a period of time where they've been using the digital financial services platform. Some of the things that have not worked out well for us is handouts that we've given to the groups. At one point in our rollout, we realized that some of the members did not have funds, and we opted to provide funds to the members of the groups that did not have funds. This did not work out well for us, and we quickly learned that rather than handouts, these people prefer to be given means to earn and to be able to afford some of the things that they need. And that has been a vital lesson for us in the things that we should not try out, or that we've not gone on to maintain and try in the other areas where we have worked. The other thing that we've realized doesn't work is trying to lend equally to all members, where we've linked them to financial institutions, and the financial institutions want the group members to take a loan from the financial institution, but share it out equally. We've realized that it is better that you lend money to the group and let the group decide which member gets how much and at what point that member borrows from the group. The reason behind this is that the group members understand the financial capability, and they also have something that is typically not captured in formal lending, which is the social credit score. The third and final thing that I have realized, but this is very important, is that trying to charge these members for using the digital platform. Remember that boxes and books are free and there is no additional cost that the members of the group incur. So when you roll out a digital platform and you want to charge them for using the platform, then it is going to become a barrier of entry. What we have found that works well in this case is to find a business model that will make it easier for you to earn revenue from other sources. So one of the things that we have done is provide utility payments through this platform so that we can earn commission from the merchants that are, or the service providers that are providing these utilities. Otherwise, charging the members of the savings groups for using the digital platform becomes a barrier to entry. Remember, it is important that if you're designing a digital solution for village savings groups, you take their thoughts and their ideas into consideration because they're the ones that are going to use this platform to transform their lives. Thank you.
Thanks a lot, Bob, for that. Again, talking about what your journey around finding what works and what might be sustainable looks like. I'd like to bring in Tigist from Ethiopia. And one of the hard jobs you have is answering to David Panetta in the chat says, there is not a single digital savings group offering in the market today that passes the sustainability and value add tests. He's not talking, Panetta is not talking about specifically a solution, but basically that's a challenge. So if you could, Tigist, talk a bit about your solution and what you think could be worked on around making it more sustainable and creating a strong value proposition for your customers. And I think you already have a potential customer in Abi who's asking for a software as a service solution. So Tigist from Ethiopia.
Sorry, Richard, it looks like we don't have Tigist online. Maybe we can follow up with her.
Okay, we can move on. But so I'd like to do another round, but this time, so talking about, and this is in line with what I just read from David, linkages 2.0, what should that look like? I think with the attributes of sustainability, strong value proposition, value add of the solutions, and maybe scale. Okay, so I'd like to bring in again our panelists to focus on this and maybe take a minute each to talk about what do you think linkages 2.0, the next stage of linkages should look like, specifically talking about these buckets of sustainability, value addition, and scale. And I'd like to start with Jacqueline.
Thank you, Richard. Thank you for bringing me back. Just in 1 minute. Yeah. For me, linkage 2.0, instead of addressing a group as a whole, I would think based on experience, we address the members through the groups. Because then when you address a group as a whole, that means you're focusing on the entire group, but these group members are different individual needs. So the individual ones, you address them in that to get the social capital, but to reach to that person will lead to sustainability, because someone is willing to pay something based on our capacity, based on our, capability, rather than because of, group impulse. That is one that works for me when for the PSAs. But for the NGOs, partnership is one that should work for you, because you can only, like one of the panelists said, we all play different roles here. The NGOs can only provide capacity building and maybe funds, but the solution lies with the digital service providers and then the financial solutions together in partnership with the users of the different solutions. Thank you.
Okay, thanks. Anthony, linkages 2.0.
Building on the last point by Jacqueline, linkages 2.0 should significantly focus on the ecosystem approach, whereby, unlike linkage 1.1, where NGOs were the ones driving the show, and it was mostly a linear relationship between the NGOs and the bank, linkage 2.0 should be an ecosystem approach in the sense that all these other voices that we are talking about now in this platform should be on the table. The telco providing the services through the agents who convert the physical cash into the e-wallets, mobile cash. We have the banks now being the forefront of fintechs as well. We should not forget the government, by the way, because somebody had asked a question about the effect of taxes on the efforts to digitize. And in Kenya, as you have heard, there is a lot of talk about taxing the chairmas of the savings groups. And I gave an example where I visited a group in Eldoret recently, and they were asking me, are we going to digitize so that it can be taxed? So the government should also be on the table, and ecosystem approach is what Linkage 2.0 should be all about. Thank you.
Thanks. Martina?
Thank you. So Linkage 2.0 for us, and this is what we're doing right now. I'll give you an example. One example. With our partner World Vision, so the NGO, we're trying to reach 130,000 groups in the next few years. So NGO prepares the group, capacity building, forming the group and strengthening them. Bringing in our case, our partner DreamSafe Labs. I'm sure you know the DreamSafe app, to digitize the group, digitize their records. From that, and now an inbuilt app has already for the group to see eligibility criteria for example, the loan. So the group, while they're doing their normal business, can already see, aspects that would be good to work on. So this enhances financial literacy, already live, basically. Vision Fund, the financial sector provider, comes in with a credit product specifically for the group. It is group-based, no collateral, no security, with support to the group, hired field officers from the community for on-the-ground support, and offers a credit product that is profitable and breaks even. So that's the selling point for the Vision Fund MFI. And with the data that we have, on the one hand, the group can easily see, what's happening with the money where it is. The product is integrated with the wallet, with mobile network providers, so definitely needs to be and is on mobile banking only. You do have to transfer and repay by mobile money, right? We need to step away from cash. That's one thing that hasn't worked in 1.0. So 2.0 needs to be digital on various levels, being mobile money, transfer repayments, credit analysis with credit score coming from, the app, and groups being able and free from the group methodology, to receive funds and manage it independently as they have done before. So this is roughly how I am envisaging the 2.0 right now.
And who sustains this?
The sustaining part, and I'm rolling it up maybe from behind. For the microfinance institution, right, this is a credit product. So we have, learned from the savings that the core product we're actually starting from is the credit product. The credit sustains itself through the interest rate charged to the group. There will now be many questions popping up at the same time. What is the interest rate that you charge to the group? Those are vulnerable and poor people. Happy to answer that. As we know, VSLAs already charge interest to themselves, right? That's how the VSLAs sustain themselves and how they grow. The credit product of Vision Fund does come in below the interest rate of what the group charges themselves. So the group methodology is based on the group actually continuing as their, VSLA savings group, and they need to stick with that methodology. So what happens is that the group receives on the wallet, right, mobile banking, on their phone, on their either group account or group SIM card, the loan, and disperses it like they do in their cash box, right? So they decide. I think Jacqueline mentioned that before. They decide who gets what. So keeping the independence of the group, they repay into the box by their own interest rate, and then at the end of the month, pay back to Vision Fund at Vision Fund's interest rate, which is lower than the box, than what they have put in the box. So that ensures some of the risk mitigation, not to overburden the group. It also ensures, some risk for the financial sector provider, because with that, you can make sure that there's always enough in the box. And that is why we can offer it without collateral and without security, which was one of the big barriers in 1.0 for the product. So the product, as in the credit, runs sustainably, and we now are trying to feature more products, on top of that. So you mentioned the insurance. For example, funeral insurance, health insurance is a really big one that we're currently trying out, that we're trying to embed in that credit. So that's on that part. On the digitization app part, I think what fintechs, and here, apologies, I'm now talking outside of my expertise, right? I'm the financial sector provider. I'm not the innovator. But from what we have seen is that a lot of fintechs have banked on the support, of NGOs that was mentioned before, which is great during the project when the project is running. The problem is then when the project ends, right? And the NGO does not continue to pay a license or, to pay the structured fee. So I think the big question going forward is how to make that part sustainable. I have a personal opinion there. I think, personal opinion is that the fintech offers, the value that the fintech offers is either to the group or to the marketplace. The marketplace is a financial sector provider. The big question is, do you offer that much value that the group, the group will take on those charges to continue to use the service, or the financial sector provider? Do you provide, now so much information and so much valuable information for me that it improves my product, and the financial sector provider is willing to pay for that information? And that is what we're currently trying out.
Yeah. Is the value proposition of digitization strong enough for people to pay? But also you mentioned how the embedded financing, which is enabled by digitization, is a strong value proposition. I'd like to bring in Postbank, Ibrahim. Ibrahim, one of my assumptions is you talked of having close to, 720, assume you can reach 1 million customers, most of them through VSLAs. And because of the VSLA methodology, you can actually easily double their lending amounts. Isn't that scale enough for you to actually make money, make this sustainable? Are there risks around assuming that if we want to capitalize rural Uganda today and we double the amount of money within the VSLA space, then we would be running certain risks and systemic issues? Why is that not happening at Postbank?
Yeah, so Richard, like I said in my earlier submission, this is a solution that we rolled out in November, only in November last year. For you to enable lending, there has to be a group is performing, that is their saving culture, their principal scoring. We are going to start with very low limits as early as the first 6 months milestone. Then we shall increase those limits as we go along. But the advantage we have now is we are not asking the groups to help provide records from their ledger books and things like that. Now we have records that we are storing based on our Wendy platform, that we don't only have access to ourselves, but the groups also have access to. And with the partnerships that we have done, Richard, it's not going to be only Postbank that is lending. Like I said earlier, what's unique about this fenced for Postbank as an institution? So Pride Microfinance is Housing Finance Bank is already there, and they are onboarding their own VSLAs. So at the end of this entire journey, we are sitting as banks and we decide how do we want to approach it. Each and every bank holds their own collection account for the VSLAs that they have brought on board. So there is nothing like a fight on whose share is it, whose customer is it. So everyone can easily see who has brought on board a specific customer. And when we have a clear track record, audit trail of how a group is performing, how an individual is performing, we are then going to go into credit scoring, which we already have on board through a different partner as well. So yes, that is the journey. We are going to be able to extend these solutions, but we are only going to be able to do that after, we have built a database of the culture or the behavior of a certain group, and we are able to do some scoring on that specific VSLA or group per se. So that is the journey, and we believe we shall get there, Richard. More interestingly is that through the partnership with the government is ready to give us a very huge investment in terms of a fund that we shall then be able to lend at a very cheap cost. But this is only possible because of the scalability that they have seen with the current solution that we have put forward.
Okay, that's great to hear. Thanks a lot. I'd like to bring in now the innovators, starting with Bob in Rwanda. What does 2.0 look like for you? And please attend to sustainability, the strong value add, and the scale. Bob, you're there? Maybe not. Lawrence Rusere from Tanzania, you're there?
Yeah, I'm still here. Thank you. So Richard, it's like this. So I'm happy that Ibrahim from the Postal Bank is made a similar support from the Tanzanian side, who would be on even 3,000 groups with half a million farmers already. In our case, we invented this, and we started this in Kigoma joint program with UNCDF. The joint program that we had since 2019, KJP1. And the support we didn't get from the Postal Bank at the time really took us backwards, and we lost the groups which we had already given cards to, about 100 of them, 100 groups, because they were not agile enough to build rollout agents networking. I'm glad that I have partners like Gerald, who understands the last mile. The last mile is key for us because that's where the action happens. So in our sustainability and even going forward for Vision 2 is to empower the last mile agencies, which we call MV, mobile village agents, or lead farmers within the groups. We need to empower them. How do we do that? We believe in trading using economy of skills, and if they are trading on inputs or good agricultural practice, inputs or hybrid seeds or produce, vice versa, the groups can be able to trade and borrow between each other substantial amounts of money without jeopardizing this issue of interest, because as we whitelist the interest part to the groups in case in the event where we issue a card. So we are actually excited that with Vision 2 coming up, and right now we've already rolled out 500 agents in 100,000 farmers in one of the programs we are doing, and we are going for phase 2, which we're going to scale up to 1,000, with 250,000 farmers. So this is doable, but you need to empower the last mile. That's my call for sustainability. Yeah.
Great, thanks. Gerald, 2.0 with sustainability, scale, and strong value addition.
Thank you, Richard. 2.0 collaborations, I think, will be top of the list. 360 collaborations. I think that collaborations between fintechs, financial institutions, development partners that work with VSLAs have to be deliberate. But, I think that particularly collaborations between fintechs and financial institutions that extend beyond simply facilitating relationships between savings groups and financial institutions will be important. I think that we also have to think about linkage to financial services in a more diversified way. How can digitization facilitate access to other essential products beyond cash-based lending? You know, how can we leverage digitization to provide non-cash loans, things like inputs or solar kits or mobile devices? These are some of the things that we at NCBUCO are now exploring and looking into, and also identifying potential partners that we could work with to facilitate these types of services. But also there have to be some kind of potential mergers. I think the space is getting crowded, especially for digital platforms. There has to be potentially some kind of mergers or synergies between existing fintech platforms. Although it's not yet official, I think Lake already sort of hinted on it, but we recently have acquired Chomoka, Kea's savings group's application a few weeks ago. The announcement will be coming out soon, so you should be looking out for it. But through this collaboration, we'll be working with the Kea country offices in Uganda, Tanzania, Ghana, and maybe Rwanda as well, still looking into it to see how we can scale digitization and access to digital financial services for savings groups. But also, you know, deliberate collaborations with financial institutions. Again, not yet official, but we have a new collaboration with a financial institution that you'll soon learn about in Uganda, a commercial financial institution that we're working with to scale up digital lending, and it's completely 360 partnership that allows us to support lending as a service. So our support extends beyond providing a digitization platform. It also includes loan decisioning, the actual design of the product, the distribution of it. So I think partnerships like this and collaborations like this is what will form digitization 2.0.
Great, thanks. And we've come to the end of our time, but just to like to bring in COMSIP, Kelvin, having listened to all this, I know you're embarking on your digitization journey. You've heard a lot, and you've also seen in the charts about the doubts about the true value of digitization and it not being actually the end in itself. What does this leave to you, to your mind about how you approach digitization and how you position the value of digitization within COMSIP and in Malawi?
Yeah, thanks very much, Richard. First of all, I must apologize that I had lost my connectivity when I was speaking earlier. In network issues. We are talking about digitization. I think it's something which is quite common in Malawi, that we have network tripling. But I'm sure that with the fintechs coming and the mobile network operators, these things will be things of the past. So we at COMSIP are looking at bringing in a value for the VSLAs to understand that their activities can be digitized. And what we want is to make sure that we are on the same page with them, so that the first thing that we must understand here is that the VSLAs themselves first have to be strengthened in terms of maybe governance and maybe the way they look at their resources. Because I'm saying this, we have heard stories that some of the VSLAs have discontinued because of a number of reasons, maybe mistrust and etc. etc. So it is quite important that we look at this holistically and make sure that as COMSIP we look at the issues to do with the linkages of the VSLAs to the formal financial institutions. I must also mention that one of the things that we have learned along the way for our VSLAs not to be able to access finance is that the financial service providers are saying they will have to incur huge cost to service their customers that are in the rural areas because of maybe lack of infrastructure and et cetera, et cetera. So we look at this to say, okay, maybe digitization is going to eliminate all that because it is going to make it cheaper for them to operate and also to make sure that the services are provided to the rural people on time. So yes, we look at Linkage 2.0 as a big enabler for financial service providers to unlock financial resources to the last mile. Thank you.
We really extensively had the chance to discuss the topic, which will remain very relevant, and I guess the relevance of how relevant digitization and linkages ought to be will continue in the foreseeable near future. Allow me to really thank everybody for staying with us and listening and participating. I see we still have 80 participants after 90 minutes of talking, but in a special way, I would like to thank all the panelists, Jacqueline from CARE, Anthony from CRS, Ibrahim from Postbank, Martina, Vision Fund, and the innovators, Gerald, we talk almost every day, Bob, Tigist, who couldn't make it, and Lawrence, and last but not the least, Kelvin. Again, we are in a space, I think, that is not given its due attention. Like you see in the numbers, the financial sector is currently the former, not really serving the people that it ought to because of various issues which the digitization, we hope, and the informal providers continue to actually deliver on. And the objective here is to see how the assets and the competences of the formal sector and of digitization can be pulled down to these informal providers for a win-win situation. So thank you so much, everyone, for attending and for participating. From UNCDF, myself and my colleagues, Rachel, Mike, and the others who supported this, thank you so much. Have a good rest of the day.